Are you wondering how the election would impact housing market? In today's video, we're going to talk about 4 reasons why the election won't dampen housing market. Coming up. Hi everyone, I am Regina Chen. I'm the local real estate agent right here in Irvine, California. If this is your first time to this channel and you want to know everything about working, living, playing, studying in Irvine, make sure you tap that subscribe button and that little bell. That way you are notified every time we do a new video. Honestly, we get many people calling who are relocating here, and we absolutely love it. So if you're thinking about moving here or coming here to stay, make sure to give me a call, shoot me a text, or send me an email. We got your back when moving to Irvine. The presidential election was over. Despite the fact that the verified ballot count is not finalized yet, the decision will definitely have a big impact on many aspects in this country. The housing market, however, will remain strong for 4 reasons. Number 1, the demand is strong. The nation's largest generation, millennials, started entering the whole housing market since last year as they reached the age to marry and have children. 2 key drivers of home ownership. And also recently, the Wall Street Journal reported that millennials, long viewed as perennial home renters who were reluctant or unable to buy, are now emerging as a driving force in the U.S. housing market recent recovery. So that is the growing demand on a national level. What we also see locally in Irvine is that we saw more families from other cities, other states, for example, from Bay Area, San Francisco, Oregon, Sonora County, and East Coast like New York. Those families, they get to continue to make their high salary and bring maybe sell off their current home, they're much higher, like much more expensive home, and take that equity coming to Irvine for 1, good weather, 2, more open space because Irvine's located in a strategic located location to very close to beach and mountains, and also they get to buy a bigger home here. I know Irvine's not cheap, but compared to like Bay Area and New York, still it's more affordable. With the same money, they can buy bigger house, and like I said, good weather, more space, maybe more bedroom count, and also good public school. So what we see locally is that the demand for Irvine homes are even higher than before COVID. Another reason why the housing market will remain strong is the mortgage rate. It's at a historical low. The all-time low interest rate has been driving demand across all generations. I know we just talked about millennial, but for the mortgage rate, it's for all generations. And this strong demand that's created by this rate drop has countered other economic disruptions. For example, pandemic, recession, and the job unemployment. And also, I just want to share with you that Freddie Mac forecasted the mortgage rate will continue to remain low through next year. This is what it says. One of the main drivers of the strong housing recovery is historically low mortgage interest rate. Given weakness in the broader economy, the Federal Reserve signaled that its policy rate will remain low until inflation picks up. And no sign of inflation. We forecast mortgage rate to remain flat over the next year. From the 3rd quarter of 2020 through the end of 2021, we forecast mortgage rates to remain unchanged at 3%. The third piece is the price appreciation. The prices will continue to appreciate. The continued lack of supply of existing home, coupled with a strong and growing buyer supply, has expert forecasting strong price appreciation over the next 12 months. So here I want to share with you what each organization's forecasted appreciation rate is. Here you can see the projected home appreciation rate for next year coming from 7 different organizations. It's a big range. Start with Zillow at 7%, and Zelman 5.9%, Freddie Mac 5.5%, NARS, National Association of Realtors, at 4.7, and HPES 3.7, MBA 3.17. The lowest one is from CoreLogic at 0.2. So it probably falls in between somewhere in this spectrum. The point is there is none of them project to see any depreciation, any price drop. The last one, why the market will remain strong, is we can look at the historical data. So yeah, it is true that the market kind of slowed down in November whenever it's a presidential election year, but the pace returned quickly. So here is information to share with you. It's from the chief economist of Myers Research. History suggests that the slowdown is largely concentrated in the month of November. In fact, the year after a presidential election is the best of the 4-year cycle. This suggests that demand for new housing is not lost, but because of election uncertainty. Rather, it gets pushed out to the following year as long as the economy stays on track. There's no doubt the outcome of this election will have a major impact on many sectors of this economy. But the housing market, which has basically stood every pandemic-related challenge to this point and will continue its strong momentum in the several months to come. So if you've been thinking about buying or selling your home, let's connect. Every family is different. I would love to lay out all the facts and the options you have and let you make the most informed decision. You can give me a call, shoot me a text, send me an email, however you want to get hold of me. Until the next video, I'll catch you later.